Okay, I want to show you two key things with regards to FHA mortgage insurance and how you're impacted by the change in the ability to write off the mortgage insurance interest beginning in tax year 2014. So this is how FHA, governed by HUD, allows you to remove the mortgage insurance on your property. You can go to the same website using the same steps that I'm showing you here. Just go to the HUD.gov website. In the upper right hand corner, there's a search box. Type in or start typing in cancellation. And when you see cancellation MIP, click on that. It's going to pop up a list of references. The second one down, how do I determine when the annual MIP will be canceled, is the reference that explains how mortgage insurance premiums are canceled prior to loans that were originated prior to 2013. If you scroll down a little bit, I just want to point out a few of the key items here. Okay, first thing, loan terms longer than 15 years, which most people seem to have the 30-year terms. To be eligible for automatic cancellation for the mortgage insurance, you have to have been paying on the mortgage insurance for a minimum of 5 years. But that's only the first part of the rule. The second part of the rule is once you've reached the 5 years, the annual mortgage insurance premium cancels when the LTV reaches 78%. Now, FHA has its own definition of LTV. When you scroll down to the notes, here it is. Cancellation of the annual MIP is based on the scheduled amortization of the loan. What this means is this is based on you just making payments, paying down the principal of your loan down to that 78% loan to value. It has nothing to do with property appreciation. So that's what this means. If you were to print out an amortization schedule, most people reach that 78% in principal reduction based on just making payments at about the 11-year mark from the time that you got your loan. The misconception is that once you hit 80% based on property appreciation and you hold the mortgage insurance for 5 years, it's canceled. And that's not the case. A, you have to hold it for 5 years. And then B, once you keep on paying and your amortization schedule hits 78% of basically where you started, then it can cancel. When you actually calculate that out, it works out to be 11 years. There's one gotcha. Now for 2014, there's a new gotcha. These are the IRS's instructions for filing for deduction for the mortgage interest. Prior to January 1st, 2014, subject to certain income limitations, you were allowed to deduct interest or deduct your mortgage insurance premium as part of the interest that you were paying. This is what's new for 2014. Mortgage insurance premiums are no longer allowed as a deduction, no longer eligible to be treated as interest paid by the borrower, taxpayer. So now for 2014, that's the new gotcha. Hopefully that helps you in making an informed decision on improving your position.